the first thing we like to say when we're talking about is that evaluating crypto projects from like an angel investing perspective, it's not that much different from an angel investing in normal startups. You're still going to go and look at the team. You're going to go look at the size of the opportunity. Is there a product market fit? Is the right timing? That's a really big one in crypto, is like, this could be something that could happen in 5 years, but if you invest in it now, the chances of it being the right timing for that application are slim. Is there a moat around some sort of business? In crypto, there's typically not a moat, in the sense that it's open source software. Someone could take it and fork it and do it their own. But is there some special sauce that this team or this project has that others don't? And because it's open source, one of the things that you can kind of do is always check the GitHub. You can check who's making commits. You can check whether they're actually developing what they say they're, if you have the technical expertise, or if you don't, you can have someone in your network that The team, itself, do they have any relative experience? That didn't really come too much into play until there were actual people that were building for a couple of years. There weren't a lot of people in the beginning. Have they run any of those types of businesses before? Do they have, their association? Are they associated with other types of good projects and people that have been successful? Does the use case make sense? Does the token make sense? Do they need to have a token? And that's, a question that you hear a lot, is like, do you really even need to have a token? And if so, why? And what are you doing with this token that couldn't also be done by just like a software as a service platform? And can you see yourself or anyone else kind of actually, there is no product yet, can you see them, using it? Tokenomics, is the team getting 50% of the tokens and then they're going to dump, right? So ensuring that the tokens are evenly distributed. A lot of times there's like fair launches and things now, which are being put up on a pedestal. Will the token, like if the token economics work, the more people that use the system, the more that the tokens themselves will be, locked in the system in some way, or the supply will be essentially locked in some way so that there isn't as much circulating, which will make the token value go up. Of course, there's always the questions of like, is this a security? And, back before there was any regulatory certainty, there's so many people that was like, well, yeah, this is going to 10x, or do you have a no action letter from the SEC? So there's so many people that would say like, oh, this token's going to go to the moon, it's going to do this. And, it's literally like illegal for you to say that in a lot of ways. So like marketing hype, like who's the marketing, do they have a good team? Are they building a decent buzz? Are they doing all the proper social channels? Check their Telegram. We invest early in term, really early stage. Like we're not investing in stuff that typically is already out. We're investing in kind of pre-sales. So kind of checking who has backed the project yet. A lot of times we co-invest around other types of venture capitalists that have the ability to do more DD than a typical angel investor or a small advisory investment firm like ourselves. Is the tech finished? Is it good? Would you is the UI decent? Like that's one of the main things in DeFi, where I feel like there's some of these projects the UI is so terrible, yet they have billions of dollars locked in their project. And I'm just like, man, can't someone just take this, make a really good UI and do the same thing? Because I just don't know how that, I always thought that some of the best UIs would end up working eventually. I'm looking at a couple different notes, like, the could be the first thing, like, does it come off as a scam, right? If you click through all of the different website, is there, a buy here button in your face all over the place? And yeah, because there's a lot of scams. If you haven't been scammed once, you probably haven't been in crypto long enough. And there's been plenty of times where I've, put a Bitcoin into something and, it's just gone, and you're like, all right, whatever. I lost that $1,000 or whatever, $500 back in the day. Putting a Bitcoin into something now is a little bit different story, right? Do the team members like each other, right? Can you tell that there's a good vibe? Because investing in startups, there's two ways that startups typically fail. One is they run out of money, and one, co-founder problems. So does the team like each other? Can they work well together? And meeting them in person is, ideal. Over COVID, that's really hard to do, but different. Are they doing good treasury management? How are they managing their treasury? That was a really big problem in the 2017 ICO boom, where some project would raise $10 million and then they would start investing the other, because there's almost no treasury management. They would start investing that in different projects, which shouldn't be what they were doing. But did they take some off the table? Did they take half off the table and put it into dollars or put it into gold? That was even one thing that Ethereum did wrong. They took Bitcoins in 2014, and in 2015 we started a bear run, and they lost half the value of the token sale. I was advising Factom in 2015, and they specifically had a treasury management thing. Was they were going to put, I think, a third into dollars, a third into gold, and a third in Bitcoin or something like that, but to protect against the treasury management. Now at least you have DeFi and you have like proper treasury management where you can earn some yield in a USDT or a DAI or something like that, where you can extend your runway a lot. And that's the staying power of the team throughout the bear market is really important, because there will be another bear market, and the projects that run out of money are going to lose. Do you see that this is a piece of infrastructure that would be necessary for humanity or for blockchain, or are they just another one of something that isn't really necessary that's going to be kind of a hype? And then I guess the final thing that I have written down here in my notes and everything and these are a lot of just questions, but who has invested already? And I can't stress this enough. Are there vetted people that have invested in it that have been successful previously? Are there venture capital firms that are willing to put their name on it? And as well as audits, security audits now are a really, really big thing, because you're locking lots of people's value up. So that's my end of my kind of list and things that we normally run through. That's a lot of questions to kind of answer and wait when we're making investments. So happy to open up some questions, and thank you very much.
You talked a lot about the qualification criteria. What are some of the red flags that you've seen over the course of your career that have turned you off from a deal that otherwise looked on paper like it was pretty good?
I've seen founders be really pushy, and not in a way where if you say I need more time to figure this out, or you ask them some certain questions and then they kind of end around. But I've seen founders be really pushy for your money instead of being kind of inquisitive why you might be hesitant and having a dialogue around it. And that to me has pushed me off several deals for, that's probably one of the biggest things there. And then I would say asking about the reputation of the founders is I wouldn't say it's necessarily a red flag, but I've seen reputational hazards come up. And even though the deal looks really, really good, if those reputational hazards come up, whether you're asking someone in their network or just asking the community, and then they can't address those types of things, that's a really big red flag that you just all right, well, if this person has a bad reputation, if they screwed other people, or they don't have a really good way of answering that, then they're probably not going to be as successful, because it takes they got to be able to inspire and have a good community reputation.
Yeah, something that's been at the forefront of my mind is that I've entrusted a bunch of CeFi companies to help me earn yield on some of my crypto, but the yields seem to be decreasing gradually over time. And BlockFi at this point is really pitiful. There's no reason why they should have really any of my money. How do you think about generating yield on your holdings, and what opportunities exist in DeFi that can compare to some of the CeFi rates?
Yeah, I think Yearn Finance is one that they attempt to try to find the best rates for you, and you put it in a vault depending on where it is. I have a lot of stuff in CeFi as well, and I'm using Voyager. I think Tantra Labs is actually a really good one. You have to lock it up. I think they can earn, I think it's 10% on your Bitcoin and something similar for your ETH, but you have to lock it up either in a 6 month or a 1 year there. And I know the founders of that. And so that's a really good one where they're guaranteeing a certain amount, but you have to lock it up. There's so much going on at this point. There's a million of them. What I know Yearn Finance was attempting to find or give you a higher one. APY Finance, I think, was doing pretty well as well, but I don't have a ton on there. Plasma Finance is one of our clients that we helped them with the raise, and this is on their token. It was like 40-50% APY. It just in savings. There's no liquidity pool for it. So that was an interesting one that we never sold any of our tokens. We locked them up, so they'll be. And then, staking rewards. You can always, it's not necessarily a DeFi, but if you have a good one that's list earning you, 5 or 10% for staking to the network, that way, that's kind of, it doesn't fluctuate too much. It's not fluctuating with how many people are over leveraging their money in the network, right?
How can someone who's very interested in kind of diversifying, like, oh, I bought Ethereum for $4, I bought Bitcoin for a couple $100, like I want to start playing in this new realm of VC and angel investing, like how does someone get started in that world? And yeah, how do you think about that?
I would say start joining some angel syndicates and start looking at the deal flow and the commentary and the questions that are being asked by other investors. You can invest on like Republic or those types of things as well. But Angel Co is a really good one where you can kind of join syndicates and they make you, say like maybe there's a $25K investment every quarter or something like that. But then being able to build relationships with other good investors that are asking the right questions is really good. And then just kind of seeing how all the good deals are presented, and then deals that you should pass on, how those are presented, and kind of making sure you make mental notes on what the differences were and what worked out. What investing as parts of groups, I think is one of the easiest ways to get started. And that's how I got started, in the sense that the BitAngel stuff was I was able to actually take a look. Part of it, I didn't really know whether any of these things were going to work out, but there was something there that, all the deals were kind of being presented, that the CEOs would come on and present over Google Hangouts or whatever, and then you get to listen to all the people ask them hard questions and things that you would never have kind of thought of. And I would say, in terms of, let's say if you had, you have the 5, 10, 20 Bitcoin or whatever that you found, you kept after high school, keep most of it in so you can just, do your thing for the rest of your life. Like I would say I overextended. I bought 2 Bitcoins worth of Ethereum back in 2014 in the token sale. And that was 4,000 Ethereum at the time. And those 30 cents, it didn't mean anything. But I put a lot of it into the Centranet, into my firm, versus like keeping, a big portion of it for myself and just saying like, no, this is my money here, and I'm not going to touch any of this. And here's the money that I'm going to play with. And it's, 25% over the course of the next year, something like that, to see what's going on. And now that you can earn money on your money, which didn't really exist until the past, year and a half, to be able to earn, then that's good. Also, if there are kind of hedge funds or people that will if you have a decent amount of it and you can go into a fund that's going to, be better at trading and kind of exiting the market when you need to, having that as your some part of your nest egg is good too, because that way you're de-risking just putting it into, kind of crypto and into one place there.
What's the average like lockup period you see for these pre-sales or seed rounds?
Yeah, I would say the US based ones at this point, I think it's almost mandatory that it's a year for the safety. The ones offshore, which there's a lot more offshore than there are in the United States, as the regulatory environment's not as friendly. I think it depends. I would say like 3 to 6 months. Typically, there's something there, the kind of liquidity event. If it's too short and there's no lockups, then that's kind of can be a red flag, in the sense that like there might just be like a really big pump and dump. But at the same time, if the company's doing really well and they have, kind of a team, they have a really good approach at ensuring keeping more people investing or locking value into it, it can still work out.